Greetings, and welcome to today's short little mini presentation on Accounts Payable Best Practices and Overview. I'm Mary Schaefer, the Publisher and Editorial Director for the Accounts Payable Now franchise. I'm also author of the Controller and CFO's Guide to Accounts Payable and 15 other business books. I'm here to spend a few minutes with you today talking about Accounts Payable Best Practices. I'm going to start off by discussing some of the misconceptions and then discuss with you why I feel these best practices are so important. And then before we close up at the end, we'll have an overview of some accounts payable best practices at a very high level position. We won't delve too much into the nitty-gritty. So a lot of times people will say to me, oh, what's the big deal, Mary? Why are you making such a big fuss over this? You get an invoice, you pay the invoice. What could possibly be more complicated? Well, anyone in any organization who takes that approach is likely to end up having big problems. And let's take a look at what some of those problems are and why they will occur. So if you get an invoice and you automatically pay it, the first thing that could go wrong is that you would end up with duplicate and erroneous payments. This is especially true, by the way, if you tend to stretch your payment terms a little bit and pay in a little bit longer than you might normally pay. So once you pay more than 30 days late, you can expect that a number of your vendors will send you a second invoice. And some of them will get paid, and they'll especially get paid if you're automatically paying them. The next thing that can go wrong is that when you make these second payments by mistake, a few of the vendors who get them, a light will go off and they'll say, these guys don't have their act together. They don't really know what they're doing. If I send them a second invoice, they'll pay it. So they'll go ahead and they'll start sending you second invoices and perhaps invoices for things that you didn't even order in the first place. Many frauds start with what was known as an honest mistake. Now, you may be looking at these issues, the duplicate payment issue especially, and thinking, well, if I pay the vendor twice, he or she will send the money back. And you are correct in about 1 out of 100 times. The other 99 times, the vendors do not return the payments. You have to identify that you made that duplicate payment and go after them and recover it, or hire a duplicate payment audit firm, and they'll charge you for completing that task. So better to not make a duplicate payment in the first place. And of course, then there's the fraud issue. Increasingly, as we go into a more sophisticated payment arena, there are increasing regulatory problems. And by regulatory problems, I'm talking about the state and all the states and the feds, who are now being more aggressive in looking for their fair share of the money that's owed them. There's a tax gap, and there's a perception that not everyone is paying what they are supposed to be paying. So there's the issue of reporting for independent contractors, and on the state level, there's the proper payment of state sales and use tax, and there's the whole unclaimed property issue. So if you don't have your payment act together, you could find that you also have regulatory issues. Now, people will say sometimes, for example, well, I'm paying the sales tax. Well, that's great if you're paying the sales tax, but are you paying it to the right state? Because if you're paying it to the wrong state, the right state will come looking for their money, and they don't care that you paid it to somebody else. That's your problem. They'll want the money that's owed them. And that's just the tip of the iceberg, by the way, on the regulatory front. If you are a public company, you'll know that you have to comply with what's called Section 404 in Sarbanes-Oxley, and you need to have strong internal controls. If you don't have them around your accounts payable function and you're just paying every invoice that shows up, that doesn't demonstrate good controls, and you're most apt to have trouble with your SOX audit. Hopefully, or you probably are beginning to guess that with some of the issues that I've talked about are going to result in you having excessive processing costs. You're going to need to have more people in your accounts payable function than you would if you'd done things properly, and that costs money. So all these things have a net impact, and that net impact comes right out of your bottom line. Now, unfortunately, it's not easy to identify it because, there's not an expense that says extra accounts payable costs. But all these issues will zap your productivity and your profitability. So let's let's just take a few minutes now. I'm not going to take too much of your time, and let's talk at a very high level about some of the principles and some of the overriding principles, as I call them, when it comes to the accounts payable function and what you need to do. The first thing that you need, especially when you're talking about fraud, is that you need strong internal controls. This is true right across the board, having everything to do with the payment function. So your invoice processing, your check production schedule, how you're doing your reporting. Each facet needs to have strong internal controls. You also need to have appropriate segregation of duties. Now, many times, larger companies do an okay job of this, but if you have a smaller organization and a smaller AP function, it becomes a little bit more difficult. Simple example of what I mean by appropriate segregation of duties. You want to make sure that one person can only do one part of a function when it comes to making payments. So, for example, somebody who can approve invoices should not be able to set somebody, a vendor, up in the master vendor file, and they should not be able to print checks, or they shouldn't be a check signer. So appropriate segregation of duties. And again, if you have a smaller AP department, sometimes this means calling in, getting some help from some other areas in accounting. And the last item is that I want to focus on when it comes to overriding principles is the standardization of processes. You want to make sure that when two people process an invoice, for example, that they both do it the same way, so that if that second invoice shows up and a second person is processing it, they do it in the same way that the first person would have done it, and it becomes apparent that it's a duplicate or that it's a second invoice, so that it doesn't get paid. So when it comes to accounts payable, while you want to encourage creativity on certain fronts, you definitely don't want your processes to be creative in the way they're processing invoices for you. So what that really does mean is when it comes to AP, the fine print does matter. Now, sometimes when I'm talking to a bunch of controllers, a few of them will say, oh, this is too much detail. You're getting down into the minutia, into the nitty-gritty. And unfortunately, when it comes to accounts payable, that is precisely what we have to do. We have to roll up our sleeves, and we have to dig into the minutia and get those small details right. For if we don't, we're going to end up with the problems that I talked about a few slides back, the duplicate payments, the regulatory issues, the inappropriate segregation of duties. So the devil, as I say, the devil is in the details. Somebody needs to know exactly what is appropriate for all those small little steps, deep down. And one last point as we approach the end, I do want to make is that when it comes to best practices, they are continually evolving. So if you're using the best practices in your AP organization that you were using 5 or 6 years ago, they may not be appropriate. They may not be giving you the protection today that they were giving you 5 years ago. So what that means is we need to look at our practices. Now, the first thing is, and many of you probably have already done this, especially if you have a director of AP or a really good AP manager, and that is to designate an AP expert. As I said, it may be the AP manager or it may be the controller. In many organizations, the controller takes on this job. There just needs to be someone who is the expert, knows what the best practices are, is able to go in and review your current best practices and see if you have any loopholes, if you've got any weaknesses that need to be closed up or need to be tightened up. So with that, I'd like to thank you for spending a few minutes with me talking about AP best practices. It's a subject near and dear to my heart. I'd like you also to, come to our website, and we have a free weekly e-zine that has tips and news about the accounts payable function. I'd like to invite you to sign up for it. And of course, it'll probably come as no big surprise to you, this mini webinar is part of a much longer presentation that we do periodically on accounts payable best practices. There's information about our presentation. You can click there and see when we're having it again, and or buy a CD of it. But whatever you decide to do, we'd like to invite you to sign up for our free weekly e-zine. Thank you for spending this time with us. Hope to see you again sometime.